Welcome to the Explainer. Today, we're diving into something that is honestly absolutely fascinating. We're going to look at one of the largest financial macro engines in the entire world, India's massive market infrastructure. And then we're going to zoom all the way down to a very real micro-level corporate disclosure. We're going to see exactly how a multi-trillion rupee ecosystem completely relies on the transparency of a single 3 crore incident to function properly. It's basically a real-time look at how trust is built and maintained in modern finance. All right, let's just jump right in. Here's our roadmap for today. First, we'll look beyond a traditional stock exchange. Then, we'll break down the diverse revenue streams, followed by BSE's financial performance. After that, we'll explore the critical role of disclosures. And finally, we'll unpack the Radiant Cash fraud case. Section 1. Beyond a stock exchange. To really get this, we need to give our understanding of stock markets a bit of a modern upgrade. Historically, people thought, actually, scratch that. A lot of people still think the BSE is purely a cash equity exchange, just a place where you buy and sell shares of companies. But the modern reality, it's drastically different. Today, we're looking at a highly diversified capital market infrastructure business. It's an entire ecosystem that includes derivatives, massive mutual fund distribution platforms, real-time data dissemination, and extensive corporate listing services. It literally participates in almost every single stage of the financialization process. And just think about the sheer scale of this infrastructure for a second. Established way back in 1875, making it Asia's first stock exchange, by the way, it has grown to host 5,663 listed companies as of the end of the 2026 financial year. It now serves a staggering 25 crore registered investors, and it operates at a mind-bending speed of 6 microseconds. That makes it the world's fastest exchange. This platform is facilitating capital formation for a massive portion of the entire Indian economy. Section 2. Diverse revenue streams. So how exactly does this massive scale translate into a scalable business model? We'll notice how well distributed the revenue actually is here. For the 2023-2024 financial year, sure, security services, which are your traditional transaction and clearing fees, they still lead the pack at 59%. But look at the other massive contributors. Services to corporates, which includes listing fees, brings in 22%. Investment income contributes a super healthy 13%, and data dissemination rounds it out at 3%. They aren't just relying on trading volume anymore, they are monetizing the entire infrastructure. A perfect example of this successful diversification is the BSE Star MF platform. Now, this isn't about trading stocks at all. This is India's largest online mutual fund distribution platform. In FY25 alone, it processed over 663 million transactions. Every single one of those transactions is a testament to how BSE has successfully embedded itself into the everyday financial habits of the regular investor. Section 3. BSE Financial Performance. Naturally, this diversified business model has led to some pretty staggering financial results over the last few years. In FY20, BSE reported a revenue of 609 crore rupees. Fast forward to FY26, and that operational revenue has skyrocketed to 4,834 crore rupees. That is nearly an 8-fold jump in top-line revenue. But what's even more impressive is looking at the bottom line. Operating profit went from 127 crore all the way up to 3,079 crore. Which brings us to this absolutely massive number, 64%. That is their operating margin for FY26. When you build an asset-light, highly technological infrastructure, the incremental cost of adding a new investor or processing a new trade is incredibly low. This is textbook proof of how tech-driven business models can scale with just incredible profitability. So the crucial takeaway here is that BSE achieved this explosive 8x growth while remaining completely debt-free. Their return on equity stands at an exceptional 44.8%, and their return on capital employed is 58%. When you look at these trends, this is exactly what a highly efficient, capital-light compounding engine looks like on paper. Section 4. The role of disclosures. Now, here is where we pivot. A macro engine of this size, handling trillions of rupees and millions of investors, is fundamentally built on one single thing: trust. And exchanges are honestly only as strong as the transparency of the companies listed on them. As noted in their filings, BSE serves over 5,000 listed companies utilizing its platform for capital raising, liquidity, price discovery, and ongoing disclosures to stakeholders. Those ongoing disclosures, they're the absolute lifeblood of the system. Without mandatory, strict reporting, price discovery completely fails, and investor trust just evaporates. The macro engine desperately needs micro-level honesty. Section 5, Radiant Cash Fraud Case. To see exactly how this works in practice, let's look at a real-world forensic case study. What you're seeing is the actual regulatory document filed directly to the BSE on April 15, 2026. Radiant Cash Management submitted this to inform the exchange of certain irregularities they identified in their fintech subsidiary, Radiant Money. This is a live example of a company actively telling the market, hey, we found a problem and here are the details. So the company disclosed that the estimated financial exposure of this incident at the subsidiary level was approximately 3.13 crore rupees. Now, take a second to think about that. Compared to the BSE's 1.48 trillion rupee market cap, 3.13 crore is literally a drop in the ocean. It is microscopic, but the rules of transparency dictate that even this must be formally reported, investigated, and disclosed. That is precisely how the system protects everyday investors. The disclosure provides a very clear timeline of events. The unauthorized activity, which actually involved manipulating business correspondent accounts, basically vendor accounts used for domestic money transfers, occurred between July 2025 and February 2026. Once the internal investigation and a digital forensic audit were completed, the findings were immediately reviewed by the audit committee and then formally disclosed to the exchange on April 15, 2026. And this brilliantly illustrates the exact mechanics of a healthy, proactive corporate response. First, their routine internal monitoring detected unusual debit activity. Second, they didn't sit around and wait. They immediately suspended the affected functionalities. Third, they brought in an external forensic agency, which revealed a former employee had actually misused residual system credentials. And finally, they initiated a massive upgrade of their cybersecurity and role-based access control protocols to ensure something like this never happens again. Furthermore, in Annexure 1 of the filing, the company provided total clarity to both the BSE and its investors. They confirmed that no current employees were involved, that official complaints were filed with law enforcement and cybercrime authorities, and, crucially, they clarified that the financial impact of this 3.13 crore incident is not material to their consolidated financials. It's clear, it's impartial, and it's highly detailed reporting. So, I want to leave you with this final thought. How do massive market infrastructures and strict corporate disclosure rules work together to build unshakable investor trust? Today we saw it plain as day. The BSE provides the world-class, lightning-fast engine, but it's the strict enforcement of micro-level disclosures, like a company proactively reporting a 3-core irregularity, that acts as the essential oil keeping that giant engine running smoothly. Without transparency at the micro level, the macro engine simply cannot survive. Thanks so much for joining me on this explainer. I really hope it gave you a whole new perspective on how our markets actually work.